Morning. So we begin with the lecture. Students, we have completed module 3, which was income from profits and gains from business or profession. Okay, in that particular module, this particular part I didn't cover because it was not mentioned in your video syllabus. But since I've given it in the notes, I'll just explain it. And in case any problems on this arises, it will be easy for you all to solve. So it is very simple. Just this particular one slide is relating to module number 3. Okay. So what is this slide saying? That taxability in case of composite income. Now, what do you mean by composite income? Composite income consists a part of a income is a business income. You have to consider it as a business income and tax it. And a part of the income will be an agricultural income. And you all know that agricultural income is exempt from tax. So you have to exempt it. So there are three such scenarios where if income is generated from that particular source, then you have to take a portion of it as a business income and a portion of it as an agricultural income. So suppose if any SSE, any person is earning income from the manufacture of rubber. See, I'm talking manufacture of rubber. I'm not talking trading of rubber. Manufacturing means where he's creating that rubber. So if he's earning any income from the business of manufacture of rubber, whatever income he is earning, 35% of that will only be treated as a business income, and it will be taxable under the head profits and gains from business or profession. And 65% of that income will be treated as agricultural income, and you have to exempt it. So suppose if I am into the business of manufacture of rubber, whatever income I'm getting, suppose I'm getting an income of 1 lakh rupees, then 1 lakh into 65%, that is 65,000 will be exempted, and only 35,000 rupees will be taxable as business income. So this particular percentage is fixed as per the rules of income tax that is given under 7A for income from manufacture of rubber. Next is 7B, which says that income from the manufacture of coffee. Students, it is manufacture. So pay attention, if any SSC is into the manufacturing business of coffee, and such income is relating to the sale of coffee which is grown and cured, then 25% should be considered as business income, 75% should be considered as agricultural income, which is to be exempted. Next, if it is a income from the manufacture of coffee, which consists of sale of coffee which is grown, cured, roasted, grounded. Okay, usually the coffee, you get that coffee beans, right? So only if that coffee beans is roasted, grounded. So if the income is generated by that particular source, then 40% of the income will be considered as business income, 60% will be considered as agricultural income. The eighth point is income from the manufacture of tea. So if any SSC is into the manufacturing business of tea, you have to consider 40% as business income and 60% of that particular income as agricultural income and exempted. So basically these are called composite income because here there is some portion of agricultural income. Like when you manufacture coffee or tea, it is some portion of it is relating to agriculture, some portion of it is relating to business income. That is why this proportion is given as per the provisions or rules of the Act. So this is the three things that you'll need to remember, and these percentages. So remember, composite income only has manufacture of rubber, manufacturer of coffee, and income from the manufacture of tea. So everyone have you all understood this particular slide? This particular slide is relating to module number 3. Did everyone understand this particular slide?
Yes,
Yes, students?
yes, ma'am.
Students, everyone?
Yes, ma'am.
Okay. Now let us begin with the lecture number 24, and let us start the module number 4, income from capital gains, under subject direct taxation. So we are beginning with module number 4. Now, module number 4 is nothing but income under capital gains. So as per VTU syllabus, it covers what is the basis of charge, means what is the basis on which you are going to tax a particular income under the head capital gains. Second, what is the meaning of transfer of capital asset? Now, third is inclusions and exclusions from capital asset, means as per the definition of capital asset, what should the capital asset include and what will it exclude? Next, what is capital gains? How do you compute the capital gains? Deductions from capital gains, and income from other sources. You have only theory. As we had seen in module number 2, we had income from salaries, in which we had income from house property, only theory part. Similarly, in module 4, income under head capital gains, income from other sources is covered, where for this particular head of income, you have only theory, no problems. And next, problems on computation of income from capital gains. So this is the complete portion for under this particular module that we have to cover. So today we will be seeing what is the basis of charge for a capital asset, for a capital gain, transfer of capital asset, inclusion and exclusions from capital asset, and what is a capital gain. So today our entire module or lecture will be on the theory part relating to capital gains, which is very important because based on that it will be helpful for you all to solve the problems. Okay, so let us see basis of charge. Now what do you mean by basis of charge? Basis on which you are going to charge a particular income as income from capital gains. Okay, so what are you going to, what is the basis? So any profits or gains, so if you're having any profits or gains arising from the transfer of a capital asset which is effected in the previous year shall be chargeable to income tax under this head in the previous year in which the transfer took place. So what is the basis? Any income if you're generating from the transfer. Now what is the meaning of transfer? What is the meaning of capital asset? We will be seeing in succeeding slides. But simple transfer means sale. If you're selling any capital asset, okay, in the previous year, then it will be chargeable to tax as income under the head capital gains, okay, in the previous year in which the sale took place, not in the year in which the agreement, you entered into an agreement to sell. No, the year in which the sale, the date of sale will be the date which will determine the year in which you're going to charge it to tax. Next, year of chargeability. What is going to be the year of chargeability? As I've already explained, capital gains are chargeable as income of the previous year in which the sale or transfer takes place. In other words, for determining the year of chargeability, the relevant date of transfer we have to consider is not the date of agreement to sell, but the actual date of sale. That is the date on which the effect of transfer of title to the property as contemplated by the parties has taken place. So students, all by this particular slide, you need to understand that capital gains shall be taxable in the previous year in which the capital asset is transferred from one party to another party. And majorly to be taxed under this head, there has to be two things which are very mandatory. There has to be a transfer, which is nothing but a sale, and there has to be a sale of capital asset. So I hope everyone has understood this particular slide. What is the base of charge? Next. Now, what do you mean by transfer of capital asset? Because the base says that there has to be transfer and that too of capital asset. So let us first understand what is the meaning of transfer of capital asset. So there are multiple meanings of transfer of capital asset. So let us understand that. The Act contains an inclusive definition of transfer. Okay. Accordingly, transfer in relation to capital asset includes the following types of transactions. So if the following type of transactions are taking place, it is regarded as a transfer. So what is the meaning of transfer? Any sale, exchange, or relinquishment of an asset is supposed to be a transfer. Now, what is a sale? You all know the meaning of sale, where there's a transfer of a title from one party to another party. What is the meaning of exchange? Exchange means barter, like there is a mutual transfer of ownership from one thing for the ownership of another. Okay, so exchange means where you are exchanging one thing for another thing is exchange. Next is relinquishment of assets. So what is the meaning of relinquishment? Relinquishment is to withdraw. So relinquishment means where you're withdrawing or giving up your right, or you're surrendering your right over a particular asset. So transfer does not only mean sale. Even if you're exchanging the capital asset, it is still falling under the definition of transfer, or you're giving up, you're surrendering a particular capital asset. It still means it is a transfer and you have to charge capital gain. Next, the extinguishment of any right therein. So extinguishment means nothing, students, but it means that putting to an end or a total destruction, you can say. So extinguishment means where you are putting an end to the right of an asset that you're having. Okay. So, for example, if there is a cancellation of any license, then that is the meaning of extinguishment. So putting an end to the particular license operation. Next, the compulsory acquisition thereof under any law. See students, what is the meaning of compulsory acquisition there under any law? Let me give you an example for this. Many a times they are narrow roads, and government, in order to widen the roads, they will demolish the houses that are constructed in that particular road. So what government does is they compulsory acquire those houses, okay, by giving them some compensation in order to widen the road. So this is the compulsory acquisition under any law. So what is happening, that house property is being sold to the government. So here the party who is staying in that particular road transfers his particular uh, house under compulsory acquisition to the government. They don't want to leave the house, but since it is under law, the government wants to widen the roads, they have to compulsorily vacate that particular house that they are staying in, and they have to transfer it to the government. So compulsory acquisition also falls in the definition of transfer. Next, the owner of a capital asset may convert the same into stock in trade of a business carried on by him. Such conversion is treated as transfer. So many a time what happens is, uh, when you are into a business, okay, suppose if you are into a business of, suppose you have multiple flats, okay, and you want to, your flat is your capital asset, but now you have entered into a real estate business. So those flats are converted into stock in trade, because when you are in real estate business, those flats become stock in trade for you, that becomes your business. So conversion of capital asset into stock in trade is also regarded as transfer. Then the maturity or redemption of a zero coupon bond, that also is regarded as a transfer. Zero coupon bonds are bonds which don't carry any interest rate. So when you are, when it is getting matured, or when you are redeeming it, repaying it, so it is also regarded as transfer. Then part performance of contract. Sometimes possession of an immovable property is given in consideration of part performance of contract. So many a times what happens, if two persons have entered into a contract, and if a part of that is being performed in exchange of an immovable property, that is also regarded as transfer. Lastly, there are certain types of transactions which have the effect of transferring or enabling the enjoyment of immovable property. So wherever there are transactions where one person is transferring to another person the right to enjoy the property, that is also regarded as transfer. So students, in short, transfer means all these 7 points. It does not include only sale, it can include exchange, it can include relinquishment, extinguishment, compulsory acquisition, conversion of capital asset into stock in trade, redemption of zero coupon bonds, giving a immovable property for part performance of contract, and giving someone the right to enjoy the uh, benefits of immovable property. That also becomes a transfer of capital asset. Next thing is, what is a capital asset, students? Because we know that the basis of charge is a charge where there has to be transfer, first thing, which we know what is transfer, and second thing, there has to be transfer of capital asset. So it is very important for us to know what is the meaning of capital asset. What does a capital asset include and what does a capital asset exclude? So let us understand what is capital asset. So students, capital asset means any kind of property. Students, pay attention. It is any kind of property which is held by the SSE, whether or not in connection with his business or profession. So capital asset means not only an asset which is relating to his business or profession. It can be his personal asset also, or it can be a asset relating to his business or profession, and it can be property in any kind, but it should be held by the SSE. And also any securities held by foreign institutional investors which has invested in such securities in accordance with the regulations made under SEBI. So students, if any foreign institutional investor is holding any security, okay, which is in accordance with the regulation of SEBI, that also is a capital asset for that foreign institutional investors. So in general, what is a capital asset? Any kind of property, students, held by an SSE, whether it is relating to business or whether it is relating to his personal, is also okay. Still, it is falling under the definition of capital asset. So capital asset includes all this. Now let us see what does a capital asset excludes. Capital assets exclude stock in trade. So these are the items which is not falling within the definition of capital assets. So if in exam it is given that a stock in trade has been sold, so you have to consider this as a business income from business or profession and not as capital gain. Why? Because simply capital asset is excluding all this. So capital asset does not include stock in trade. First of all, what is the meaning of stock in trade, students? Stock in trade is nothing but you can say as consumables or raw materials, which is held by the business or profession in order to sell it off. Okay, so what is the treatment of stock in trade that you will, suppose if you are making profit on the stock that you're selling, under which head will you tax this? You will tax this under the head profits and gains from business and profession, but not capital gains, because capital, in order to be taxed under capital gains, there has to be two things. There has to be transfer, which is happening, and there has to be capital asset. But here, this is not falling under the definition of capital asset, therefore you have to exclude it. Next is personal effects. Now, what do you mean by personal effects, students? See, as per the definition, personal effects means any movable property. Students, remember, personal effect means any movable, not immovable. I'm talking about movable property, which is held by the SSE for his personal use. Okay, either by he's using it or either any dependent member of the family is using it. Personal effect, again I repeat, is nothing but any kind of movable property which can move, is held by the SSE or any member who is using it. who is dependent on him for their personal use. So for example, if Aishwarya Rai is selling her car, personal car, what she's using, if she's selling that particular car, will it be taxed under the head income from capital gains? No, simply because it is not falling under the definition of capital asset, because capital asset excludes personal effects, which means Aishwarya Rai is selling her car. Car is a movable asset, okay, and she's using for her personal use. Therefore, the sale of car will not be falling under the definition of capital asset. And if it is not a capital asset, it will not be chargeable to tax under the head capital gains. Is that clear? Now, personal effects will exclude certain things like jewelry, paintings, sculptures, drawings, or any piece of art or archaeological collections. If all these things are having personal effects, they will not be included in the definition of personal effects. Like personal effects will be having all the movable property exception jewelry. So if jewelry is being sold, if Aishwarya Rai is selling her jewelry, she will be liable to capital gain tax, because personal effects is excluding jewelry, excluding paintings, excluding archaeological collections, excluding sculptures, excluding drawings, and any piece of art. If there is any piece of art which is having even personal effect, it is excluded from personal effect definition. Therefore, it will be chargeable to tax. So, students, have you understood the personal effect meaning? Students, have you understood the meaning of personal effects?
Yes, ma'am.
Okay, so I'll ask you all two questions. Tell me whether it will be included in the definition of capital asset or excluded, okay, or whether it is having personal effect. Suppose I am selling my clothes, whatever I'm wearing apparel, means my attire, I'm selling that, okay. So now, will it be liable to capital gain tax?
No,
Now the
ma'am.
attires,
No, ma'am.
okay, what is the
Excluded.
reason? Why?
Personal effect. Excluded.
Why is it excluded? Because it is having personal effect. It is movable. My clothes I can move, and plus it is used for the personal use of the SSE, and it is not covered in the exclusions. Exclusions may we have seen any piece of art. So it is excluded. Very good. Second thing, suppose I have a house property in which I am staying. Okay, my house in which I am staying, and I'm selling that house. Okay, now house which I am staying is my personal thing, correct? Now if I'm selling that house, will it fall under the definition of capital asset?
Yes, ma'am.
Yes, ma'am.
Why?
It is not movable. It is fixed.
Very good, very good. So who was this? What's your name? Who answered the
Divya.
question?
Divya,
Very
ma'am.
good, Divya. Very good. Very good. So personal effect means only movable property held for personal use by the SSE and his dependent members, but excludes jewelry, paintings, drawings, sculptures, any piece of art. So understand, students, each exclusions you all are supposed to understand in order to know whether it is liable to tax under capital asset or gain or no. Next, rural agricultural land in India. So any agricultural land in India is not going to be a capital asset. Exceptions. There are certain exceptions that land which is situated within the jurisdictions of municipality, okay, is not treated as a capital asset. So they have given the kilometers like up to 2 kilometers from the cantonment board. If the rural agricultural land is there and the population is between 10,000 to 1 lakh, then it is not considered as a capital asset. Similarly, up to 6 kilometers, if the land is situated, okay, where the population is more than 1 lakh but not exceeding 10 lakhs, then it is an exception. And up to 8 kilometers from the cantonment board, if the population is more than 10 lakhs and if your land is situated, it is an exception. So this I'll be covering it in the notes. So just understand, rural agricultural land in India, okay, is an exclusion from capital asset, exception those limits what I have told you all now. Next, specified gold bonds. See students, if any specified gold bonds is issued by the central government, remember, if it is issued by the central government, it is not a capital asset. Specified gold bonds like 6.5% gold bonds 1977, 7% gold bonds 1980, national defense gold bond 1980. So there are certain specified gold bonds which again I will be giving it on your notes. If those are issued by the central government and if they are transferred also, don't please treat it as a capital asset because it is excluded from the definition of capital asset. Next, special bearer bonds 1991. If these special bearer bonds 1991 is issued by the central government, again it is not a capital asset because it is excluded from the definition of capital asset. And even if the special bearer bonds is being transferred, still you will not charge it under capital gains. Next, gold deposit bonds. If any gold deposit bonds is issued by under the gold deposit scheme 1991 or deposit certificate which is issued under gold scheme 2015, which is notified actually by the central government. So remember, all the below three, if it is issued or notified by central government, it is not going to be a capital asset. So we have seen what is the meaning of capital asset, what it includes, what it excludes. Students, exclusions from capital asset is very, very important. Even for your theory question, this is very important. And even to identify whether a particular problem needs to be solved under capital gains or no, this particular exclusions is very, very important. So keep it in mind. Stock in trade is not a capital asset. Anything having personal effect, movable personal effect, not a capital asset. Rural agricultural land in India, not a capital asset. Specified gold bonds, special bearer bonds, and gold deposit bonds, not a capital asset. Next, types of capital asset, students. Now you'll know what is a capital asset. It is nothing but any kind of property held by the assessee, whether relating to his personal use or whether relating to business or profession. So what are the different types of capital asset? So capital asset can be divided as short-term capital asset or a long-term capital asset. Now, how do you classify a capital asset as short-term or long-term? Pay attention, students. If a particular capital asset, you are holding it for 36 months or less, before the sale, before the date of sale, if you're holding that capital asset, if you're owning that capital asset for 36 months or less, it is said to be short-term capital asset. And if you're holding the capital asset for more than 36 months, okay, before the date of sale or before the date of transfer, it is called as long-term capital asset. So what is short-term capital asset? Let us read. It means a capital asset held by an assessee for not more than 36 months immediately before the date of transfer. So today, suppose if you are selling a land, okay, and you have held that land for suppose 24 months. So that becomes a short-term capital asset. That land is your short-term capital asset since you're not holding it for more than 36 months. But suppose if you're holding that land for more than 36 months before the date of sale, then it becomes a long-term capital asset. So students, have you all understood what is short-term capital asset and what is long-term capital asset? Simple. Just remember, if it is Any asset is with you for 36 months or less, it becomes a short-term capital asset. Any asset is with you for more than 36 months, immediately before the date of transfer, it becomes a long-term capital asset. Now, this period of 36 months has certain exceptions. Now, in the following cases, an asset shall be treated as short-term capital asset if it is held for not more than the following period before the date of transfer. So in this particular capital assets, instead of taking 36 months, we have to consider 12 months. If these below capital asset is held for 12 months or less, it becomes short-term capital asset. And in these two cases, if the asset is held for 24 months or less, it becomes short-term capital asset. So let us see what is the criteria for 12 months. What are the capital asset falling under 12 months? Equity or preference share in a company. So if you're holding an equity or preference share in the company, okay, for less than 12 months, it is a short-term capital asset. For more than 12 months, it is a long-term capital assets. Next, any security, for example, debentures, government securities listed in India. Next, a unit of an equity-oriented fund, whether quoted or not, zero coupon bonds, whether they are quoted or not, units of UTI, whether quoted or not. So remember, students, for these particular securities, okay, these particular 5 securities, it is considered as short term if it is the holding period is 12 months or less. And if you're holding all these securities for more than 12 months, you have to consider it as long term. Next, 24 months in case of these two, that is equity or preference shares in an unlisted company. For 12 months, it is listed in India, listed companies, and this is unlisted companies. And immovable property being land or building or both. This you have to consider 24 months. Apart from all this, if there is any other capital asset, the period of holding that you have to consider is 36 months. So only for this 5 and this 2, the period of holding is 12 months and 24 months respectively. And for rest, any other capital asset, the period of holding will be 36 months in order to determine whether that particular capital asset is a short-term capital asset or a long-term capital asset. So students, is this clear? When you have to consider 12 months, when you have to consider 24 months, and when you have to consider 36 months. So students, just have you understood this particular how to bifurcate a capital asset into a short-term and long-term capital asset? Have you understood this portion? Yes, students?
Yes, ma'am.
Yes, ma'am.
Okay. So I'll ask you all a question. Just tell me, okay? Suppose if I am holding a particular building for 28 months. So, and I sell it. After holding for 28 months, I sell that building. So tell me whether I am holding a short-term capital asset or a long-term capital asset.
Short-term capital asset.
Short-term. Short-term capital.
Yes, students? What's your answer?
Short-term capital asset.
I can't hear. What is your answer?
Long-term. Ma'am,
Long-term.
short-term capital asset.
Short-term capital asset, ma'am.
Who said short-term?
Because it is more than 24 months.
I said 28 months. How it is short-term? Students? Who said short-term? Justify your answer.
Ma'am, long-term.
Students? Am I audible to you all?
Yes, ma'am. Ma'am, that short term period is 36 months, ma'am. Uh, Here in 24 months,
But
innovable
dear,
property.
But dear, see here, I have in this slide there is an exception. If the assets are these two assets, then it is said to be short-term capital asset if it is not held for more than the following period. So if it is 24 months in case of immovable property being land or building or both, maybe. So in case of land or building, you have to see the period of 24 months to determine whether it is short term or long term. So if it is below 24 months or 24 months, it is short term. More than 24 months, it is long term. So I told building held for 28 months. So it becomes short term or long term?
Long
Long
term,
term,
ma'am.
ma'am.
Long term, right? Yes, students?
Yes,
Yes,
ma'am.
ma'am, it's long term.
Exactly. Now, second question, just to see whether you are understanding or not. Okay. Suppose I have a gold jewelry. Okay. And I have held it for a period of not in months, I'll tell you in years. I've held it for a period of, you can say, 5 years. And I'm selling it off.
Long term, ma'am.
Long term, ma'am.
Long term, ma'am.
Why long term? Why long term?
Ma'am, more than
5
36
years,
months.
ma'am. 36 months more than.
Very good. And it is not falling in the exceptions. In the exceptions, only these five and these two are falling. That is where you have to consider 12 months and 24 months respectively for these particular securities or assets. Very good, students. Now you all have understood. Okay. Now moving ahead. Now, what is a capital gain, students? Simple. Gain is nothing but profit. So, any gain that you are arising from the sale of capital asset, from the transfer of capital asset, it is said to be capital gains. So, gain arising from transfer of capital asset. Now we know what is the meaning of gain is nothing but profit or loss. If it is a loss, it is said to be capital loss. What is the meaning of transfer? We have seen the 7 different points. What is the meaning of capital asset also we know by now. So gain arising from the transfer of capital asset is nothing but a capital gain. Now, capital gain is of two types. We have short-term capital gain and we have long-term capital gain. Now, what is the meaning of short-term capital gain? Simple. Gain arising from the transfer of short-term capital asset. If you're earning any income or profit or gain from selling any short-term capital asset, it is said to be short-term capital gain. I request the students to kindly mute your audio. And if any gain is arising from the transfer of a long-term capital asset, it is said to be long-term capital gains. So students, capital gains are of two types, short-term capital gain and long-term capital gain. When we say it is short-term capital gain, when any gain you're getting from the sale or transfer of a short-term capital asset. And now you'll know what is short-term capital asset. And gain arising from the transfer of long-term capital asset is said to be long-term capital gains. So in our today's module, we have seen different aspects like what is the basis of charge, what is the meaning of transfer, what is the meaning of capital asset, what does it include, what does it exclude, what are the different types of capital asset, short-term and long-term capital asset, how do you identify it as short-term and long-term capital asset, what is a capital gain, what are the two different types of capital gains. So by this, we have completed our today's lecture. Thank you so much, students. In our next lecture, we will be seeing how to compute. Now is the main part that how we are going to compute the short-term capital gains and long-term capital gains. Okay, so that part is relating to your problem solving. Any doubts, students?
ma'am.
No, ma'am.
Okay. If there is no doubt, let me start asking you all few questions. Okay. So today we saw basis of charge. Can anyone tell me what is the basis of charge under capital gains? When will you tax a particular income under capital gains? What is the base for that? What is the base? When will you tax any income under the head capital gains? When there is a income which is arising from two particular things has to be there. There has to be a students. What has to be there?
Transfer and sale of capital
Transfer of
assets.
sale of capital assets.
Very good. So two things has to be there: transfer, and the transfer should be of capital asset. Now, which year are you going to charge it to tax?
Previous years.
Previous year.
Previous year in which the sale is taking place, not where the agreement to sell, where the actual date of sale is taking place. That previous year you're going to charge it to tax. Very good, students. Now next, B point. Can anyone tell me transfer means what? I don't want all the 7 points, but one, two things you all can tell me. What does transfer mean? What do you mean by transfer, students?
Ma'am,
Sale.
transfer means the sale or exchange or
Very good.
of asset.
Compulsory acquisition also is a transfer. Very good, students. Next, what is the meaning of capital asset? What is capital asset? It is nothing but any kind of property which is held by the SSE, whether it is relating to business or not relating to his business or profession. Can you all tell me any two exclusions? What is to be excluded from the definition of capital asset?
Ma'am, stock in trade,
Stock in
Stock
trade.
in trade.
rural
Very,
agriculture land in India, specified gold
very,
bonds,
Personal.
special
very good.
bearer bonds, gold deposit bonds.
Very good. And personal effects. Very good, Padmaja. Next, what are the different types of capital asset?
Short-term asset and
Short term and
Short term and long term.
Okay. To determine it as short term in general, I'm not telling the specified 12 months and 24 months. In general, if you want to determine short term capital asset, what is the period of holding you have to consider?
36 months.
36
36
months.
months.
Months or less if you're holding it immediately before the date of transfer. Very good, students. Now, what is the meaning of capital gains?
Any income arising from sale or transfer of a capital asset.
Very good. What are the two types of capital gains?
Short term capital gain and long term capital gain.
Okay. When will you tell a particular gain as short term capital gain?
Less than 36 months, ma'am.
Whenever
When
gain is
short-term asset is transferred and the income arises from that gain is considered
very
as a
good.
short.
Very good, students. So you all have rightly answered all the questions. Thank you so much. Okay.